Hey guys, and welcome to this video on how to invest like the best US investors. So I'm on a website here called Fintel, and on Fintel you are able to look at the different investors in the US and look at their holdings within their portfolios. So I'm having a look here at Berkshire Hathaway. So for those of you who don't know, Berkshire Hathaway is the company owned by Warren Buffett, the most successful US investor ever. So Warren Buffett has different stocks that he owns through Berkshire Hathaway. He owns them and can benefit from the stock increases they see and has the within the holdings of Berkshire. So if you come onto this website and have a scroll down through, you're able to see the different companies that Berkshire Hathaway hold. So Warren Buffett, his top holding is in Apple. He has 245 million shares of Apple, and you can see the percentage of his portfolio that he has within Berkshire Hathaway. He's 29% of his portfolio in Apple. So he's obviously betting big on the tech giant. As well as that, then he has Bank of America. So 13% of his fund is in them. If you have a look here, you can see when this was from. So this is from the year end from last year in 2019. So if you scroll down, you can see the different holdings within Warren Buffett's portfolio. I mean, instead of you going and doing your own research on stocks, if you are someone who doesn't have much of a stock knowledge, this is really a good way to look at the best US investors, look at what they have in their portfolios, and you can also view then the different changes they're making as well. So if you Google Warren Buffett and look at the holdings he's changing, you can see if he is divesting from any of these holdings he has or if he's increasing his position. It is good to be able to find different stocks that you can put on a short list yourself to go and do a bit of looking into and see if they look like they would be good for you. But he also, Warren Buffett, looking at him here, he has a lot of stuff in banks. So he's in Bank of America, he's in Wells Fargo, and he's also in JP Morgan. He's a big advocate of Coca-Cola. So he loves this stock. He's a big Coca-Cola drinker himself. And if you think about it, Coca-Cola is a brand that is so recognizable around the world. Lots of people drink Coca-Cola and it's hugely popular in America. Coca-Cola isn't a stock that is going to decrease in the next 10 years. There's always going to be people out there purchasing Coca-Cola. It's always going to be a sought after product. So that seems like a very good long-term play from Warren Buffett, and you can really say the same about Apple. But when the new iPhone comes out, every person is queuing up to get the next iPhone. So with the brands he has in the portfolio here, they're very recognizable, and they have such consumer loyalty here that the profits for these companies will continue into the future. Next, we'll go on to Bridgewater Associates. So if any of you guys know Ray Dalio, he is the founder of Bridgewater Associates, and this is his fund and the ownership he has within his stocks. So if we look here at the top, so Ray Dalio holds a lot more ETFs compared to Warren Buffett. Really, Buffett has individual stocks, but if you look at Ray Dalio, his top holding is an ETF, the Spider S&P 500 one. So he has nearly 23% of the fund allocated into the S&P 500. As well as that, then he's a big bet on the Vanguard FTSE Emerging Markets. So the Emerging Markets ETF, that consists of different emerging countries. So you have the likes of a lot of Asia in there. So China would be a big bet within that fund, that ETF. He also has gold, so he increased his gold holding a lot at the end of last year, and that really paid dividends for him considering how much gold has gone up with everything that's going on with coronavirus. He's a bet on Brazil then as well, but he calls this really the all-weather portfolio. So he has a nice balance here between stocks, shares, and gold. So no matter what sort of market conditions are out there, with the all-weather portfolio, Ray Dalio says it will always make money because it will perform well in a downturn or an upturn, and bonds really give you that downside protection. I could go into that more in another video, but this is a nice balanced portfolio you can see from Ray here, and he does have his risk diversified because he is an ETF, so it lets him hold a lot more stocks by having it in an ETF as opposed to an individual stock, and he has bonds then to offset that risk as well. So look, I mean, this is a very good source, Fintel, to be able to go in, look at the stock holdings of the best investors in the US and have a look at their portfolios and if some of these different ETFs or stocks could fit into your holdings. And finally then, I'm going to have a look at Bill Miller. So Bill Miller, one of the most popular value investors out there. So he picks a value strategy which is a lot more around businesses that have stronger balance sheets and have lower price earnings ratios compared to growth stocks. So if you have a look at his opportunity trust here, this is he's looking for long-term returns from this from a 3 to 5 year time frame. I mean, if you go on and look at any fund manager in the US, you're able to have a look at their fund fact sheet. So a fund fact sheet, as you can see here, tells you the portfolio managers. So you can see them up on the top left here. You can see what exactly this Miller Opportunity Trust, the investment approach they take. You can read into it and see if it aligns with your goals, what you're looking for, and read into that. So having a look at the valuation analysis, it's on a multiple of 10 on the price to earnings ratio. So in terms of value, very good value there compared to the S&P 500. The price to book ratio as well. So the book value of the assets, the price in relation to these stocks in comparison to their book value of their assets is less than the S&P 500 as well, which shows it's good value, so a value stock. And the price to sales as well is not as high as the S&P 500. So look, overall it does look good here. Obviously he's sacrificing the earnings per share growth compared to the S&P 500 for these value metrics, but that should hold up a lot better in a downturn like we're seeing at the moment because he has value on the balance sheet of those different stocks that he holds. So if you have a look over here on the left side, you can see the portfolio statistics. So he has 40 shares that are within this fund, and you can see the top 10 holdings within it then. So this is another opportunity to be able to see what the best investors in the US are investing in, where they're putting their money. So you can see these different stocks: ADT, Bausch Health, Amazon. His third biggest holding is Amazon, and he has Facebook as well. So look, there are some growth stocks in there for sure. I mean, Amazon and Facebook would be big growth players there that he is betting on. You can see the sector allocation then that Bill Miller breaks it down for. So the percentage of the fund and how he is distributed. So a lot in healthcare. He has 24.4% then in consumer discretionary, and the rest of the breakdown if you have a look down through here. So look, fund fact sheets are a very good source for you to go and get insight from the best investors in the US. Look at what they're investing in and see if the different investments they have align with your investment strategy. Thank you guys for looking at this video. If you have any sort of questions at all, I'm very happy to answer them. Just leave a comment below. If you found this video useful, please give it a thumbs up. As well as that, if you like this content, please subscribe to my channel as I will be producing a lot more stuff like this. Thank you.